You know what nobody talks about? The fact that Bitcoin's most violent moves happen right after everyone stops caring. Right now, in early 2026, we're watching it happen again. The price is grinding sideways, the headlines have dried up, your cousin who wouldn't shut up about crypto in 2021 hasn't mentioned it in months. And the trading volume looks like a flat line on a heart monitor. This is exactly when you should be paying attention, because history doesn't just rhyme with Bitcoin, it practically plagiarizes itself. Let me tell you something controversial. Boredom in Bitcoin isn't a warning sign that the party's over. It's the cover charge for the next mania. Every single major Bitcoin cycle has featured this exact pattern, and every single time, the vast majority of people miss it because they're conditioned to buy excitement and sell boredom. That's backwards. That's how you become exit liquidity for people who actually understand how this market works. Think back to mid-2016. Bitcoin was trading around $400 to $600, stuck in this miserable range for months. The media had moved on. The Reddit forums were ghost towns compared to the chaos of 2013. Volatility had collapsed to levels that made Bitcoin look more stable than some dividend stocks. It was so boring that even the true believers were questioning whether this thing had any momentum left. Then what happened? Bitcoin went from $700 in December 2016 to nearly $20,000 by December 2017. That's not a typo. That's a 2,800% move that started from a base of pure, uncut boredom. Fast forward to 2019. Bitcoin had crashed from its 2017 highs, spent all of 2018 bleeding out, and by early 2019, it was stuck in the $3,000 to $4,000 range. Volume was pathetic. Volatility was dead. The only people still talking about it were the ones who'd been holding since the beginning, and even they sounded tired. The narrative was that Bitcoin had had its moment and missed it. Then it quietly doubled to 8,000, pulled back, went sideways for months in the most mind-numbing range imaginable, and by late 2020, it started the run that took it to $69,000 in 2021. Same pattern: boredom, consolidation, explosion. Here's what's actually happening during these boring phases, and this is where it gets interesting. While retail investors are scrolling past Bitcoin like it's yesterday's news, the smart money is positioning. They're not buying with market orders that light up the order books. They're accumulating slowly, carefully, using the low volatility as cover. When nobody's watching, you can build a position without moving the price against yourself. It's like loading up a spring. Every day of sideways action is another coil getting compressed. The longer it stays boring, the more potential energy builds up in the system. And let's be brutally honest about something else. Most people are terrible at investing because they're emotional creatures pretending to be rational. They buy when their emotions are screaming at them to buy, which is always at the top when everyone's excited and the gains feel inevitable. They sell when they're scared, which is always at the bottom when it feels like it'll never recover. The boring middle? That's when rational action is required, but emotional payoff is zero. So they do nothing. Or worse, they sell out of impatience and miss the move entirely. The volatility compression we're seeing right now isn't a sign that Bitcoin is dead or mature or whatever quote people are using to justify ignoring it. It's a sign that the market is coiling. Low volatility periods in Bitcoin don't last. They can't. The asset is too small, too globally accessible, too divorced from traditional correlations, and too subject to sudden narrative shifts. Something always breaks the range. Always. And when it does, the move is violent because all that compressed energy releases at once, and you get these explosive breakouts that leave people scrambling. Let me give you the uncomfortable truth that nobody wants to hear. If you're waiting for Bitcoin to feel exciting again before you pay attention, you're already too late. By the time it feels exciting, by the time your social media feed is full of Bitcoin talk again, By the time CNBC is running segments about whether this is the new paradigm, the easy money has already been made. You'll be buying from the people who accumulated during the boring phase, and you'll be setting yourself up to sell to the next wave of latecomers at an even higher price. Or, more likely, you'll panic sell when it corrects and they take your money. This isn't just speculation or wishful thinking from Bitcoin maximalists. This is observable, repeatable market behavior. Every Bitcoin cycle has a distribution phase where it tops out in euphoria, a capitulation phase where it bottoms in despair, and then this long, grinding, boring accumulation phase where nothing seems to happen. We're in that third phase right now. The chart looks like it's going nowhere. The news cycle has moved on. The volatility has died. This is the phase where fortunes are positioned, not during the exciting parts. And here's another thing nobody wants to admit. The danger isn't that Bitcoin stays boring forever. The danger is that it stops being boring when you're not positioned, and you're forced to make decisions in real time during a violent move when your emotions are running hot and your judgment is compromised. That's when mistakes happen. That's when you buy the top of a breakout that immediately reverses, or you short the bottom of a dump that bounces, or you freeze completely and do nothing while opportunity evaporates. Think about what boredom actually means in a market context. It means consensus. It means everyone who's going to sell at current prices has sold. Everyone who's going to buy has bought. The market has reached a temporary equilibrium. But markets don't stay in equilibrium. They're dynamic systems with constantly shifting supply and demand. The longer an equilibrium holds, the more fragile it becomes, because it takes less and less to tip it in one direction or the other. That's why breakouts from low volatility ranges tend to be so violent. There's no natural resistance or support nearby because the market hasn't traded there recently. It's all air. Now, I'm not going to tell you Bitcoin is definitely going to $1 million or crashing to zero, because I don't know, and neither does anyone else. What I am telling you is that historical patterns suggest these boring phases resolve with significant directional moves. And if you're not paying attention during the boring part, you won't be prepared for the dangerous part. And make no mistake, it will get dangerous. Not dangerous as in Bitcoin will hurt you, but dangerous as in the opportunity cost of being wrong or unprepared is massive. The psychology of this is fascinating. Humans are wired to respond to immediate threats and immediate rewards. We're not good at monitoring slow-building situations that might explode later. That's why people ignore rising floodwaters until they're knee-deep. That's why they ignore chest pain until it's a heart attack. And that's why they ignore boring Bitcoin until it's already moving and they're chasing. We're just not built to stay alert during quiet periods, even when those quiet periods are historically the most important time to be alert. Here's what I think is really going on, and this is the most controversial part. The market is a wealth transfer mechanism, and these boring phases are how the transfer gets set up. The impatient sell to the patient, the emotional sell to the rational, the distracted sell to the focused. Then, when the move happens, the wealth flows from the people who weren't positioned to the people who were. It's not fair, it's not democratic, it's just how markets work. They reward attention and punish distraction, and they're specifically designed to make attention feel unrewarding for as long as possible before the payoff hits. So yeah, Bitcoin feels boring right now. The charts are flat, the volume is low, the volatility is compressed, and nobody seems to care. That's not a bug, that's a feature. That's the market doing exactly what it does before every major move, which is lulling people into complacency so they're not prepared when things change. The question isn't whether it'll stay boring. The question is whether you'll still be paying attention when it stops being boring, or whether you'll be one of the people scrambling to figure out what's happening while the move is already underway. Because if history is any guide, and it usually is, this calm won't last, and when the storm comes, It won't wait for you to be ready.